Welcome back. It's time to talk about DB Corp's Q1 earnings. Company saw 50% surge in net profit year-on-year, while margins were aided by advertising revenue growth. Management is maintaining growth trajectory across print, radio and digital platforms. To discuss more on the Q1 performance, Girish Agrawal, Promoter Director at DB Corp, joins us now. Mr. Agrawal, good afternoon. Thank you so much for joining us. Well, as always, the first question will be that, yes, Q1 was strong. What is the outlook for FY25? Because it has been a very strong FY24 overall. What are the triggers now? And will you be able to maintain this 600 crore of revenue run rate throughout the year?
So I think what we are waiting for is the budget. Because the monsoon so far looks good. And if the budget also goes in the same direction, then I think this year would be also another stellar year.
So what kind of spends are you expecting, post-budget? How did Q1 pan out in terms of advertising spends by corporates as well? And what is it that you're anticipating or expecting from the budget that can act as a kick or as a trigger for you?
See, my advertising business is all dependent on the market. In the sense, if consumer companies, automobile companies, education companies, they all do well, I will certainly do much better. So, for example, if this budget gives certain benefits to all these sectors and increase the consumer uptake in the market, then I'm very confident that this will help advertising to go up. Because for me, all the sectors, the automobile, real estate, banking, finance, jewelry, all of these sectors are firing for me. So I'm very hopeful that this budget will take care of them and they in turn will take care of me.
Well, there is an expectation there could be some relief to boost rural consumption, which has already been doing well in Q1 for sure. What really worked in terms of margins as well was that newsprint prices came down drastically in last couple of quarters. Now some of these companies have gone ahead and increased paper prices. Is that impacting newsprint paper prices as well? What's your take in terms of margins? The 27% mark, is it maintainable?
Last year, we were at almost 57,000 rupees per ton on this quarter. And this year, we are at almost 47,000 tons. So there is a sharp decline. And I'm not worried about the mills raising the price. I'm more concerned about the freight. Because of the international affair, the freight cost has gone up in last quarter. So I'm more worried about that.
Girish, last time you spoke to us, you told us that government spending as part of your ad spends was close to 13 to 15% of the total ad spend. We understand that Q4 and Q1 you may have peaked out in terms of the government spending there, given the fact that the elections are now behind us. How do you expect that particular portion of ad spends to moderate, and what kind of ad spends will you be guiding to for the rest of the year?
See, I think government spending, which went up for last 2-3 quarters because of election, will certainly come down. But having said that, other sectors, should fire. I'm very hopeful on the other sectors that looking at the overall growth in their country, I'm sure those sectors will help me to continue this kind of growth.
Mr. Agrawal, coming back to the margin point, I wanted to understand because a lot of companies have spoken about, freight rates going higher and that is impacting raw material prices. There are no two ways about it. In that case, what happens to margins? Because margins have been improving for you. I've just been looking at the trends as well, and there's been a substantial increase here. Do you think it will stabilize and there's not really a room for improvement from here on?
From 24% last year, we came this year to 31% margin, EBITDA margin. So I think this 31% margin EBITDA is a good number. It should stay around 1% here and there.
Okay.
Girish, you mentioned that the digital platform will be a powerful pillar of growth. Now, going forward, what kind of growth do you see there? Would you be able to quantify it in terms of revenue profitability? You are also experimenting with paywalls earlier. What is the update over there?
So in terms of my monthly active user, the number has now gone up to almost 18 million plus. So that's one positive for us. And as I told you last time, we're experimenting in various segments, and the initial results are decent, good enough, I would say. So we are very hopeful that going forward, this should be another business model for us.
So is it breaking even if we just talk about the digital business? Is it profitable? And will you look at, demerging that as a separate business and just grow that separately? Is there any plan around that?
No plan for demerging. In fact, you remember 10 years back, we took the radio back into the company. So no plan. DB Corp has all possible media in it. So we want to continue as DB Corp as the main company.
Oh. And how's the ad revenue trending as far as the radio business is concerned? Is that on an upward trajectory?
Radio grew by almost 6% in this quarter, and they maintained a profit margin of 34%. Unless Government of India opens up the news and current affairs in radio, radio, frankly speaking, is not a worthwhile business in this country.
So, are we seeing any updates happening in the radio business for you yourself? What's the plan here then?
I'm sure somebody from the Information Ministry is watching your channel right now, listening to this, and they would act on it.
Okay, all right. Mr. Agrawal, thank you so much for joining us. Always a pleasure speaking with you. That's the word coming in from DB Corp. Strong set of numbers, but the stock has done really well, and we are seeing some profit booking right now. We'll do one thing. We will take your leave on this edition of Midcap Radar today, but stay tuned. MF Corner when we return.